everyone, and welcome to this very special show on ET Now. I'm Avan Dabash. As we are on the cusp of the festivities for Samvat 2079, it looks like the buzz is in the air for the markets. And I have a very special guest joining me who's going to walk us through his investment philosophy, outlook on the global markets, and hopefully get some dhamaka stock ideas.
Dhamaka stock, that's it.
Raamdeo Agrawal, who needs no introduction, of Motilal Oswal Financial Services. Thank you so much for joining us today on ET Now. You want me to ask you hatke questions, so I'll start off with my first one. Let's use some Diwali terminology. Do you think that it'll be a rocket for the markets? We go one way up, a fulgari, little bit of consolidation, or a chakri? We're on our way down.
You're talking about next 1 year?
Next 1 year for the Indian equity markets.
Yeah, so the last 1 year has been kind of a consolidation phase, maybe 5-7% decline, 6-7% decline. So I think we are still in that phase.
So fulgari.
Yeah, it's a kind of a, like what I was saying, the global investors will not allow it to go up, and retail investors will not allow it to go down. So it's stuck. So something has to change. So the environment is so unpredictable right now, global environment. In fact, India is actually center of peace worldwide.
We're in a sweet spot.
Very sweet spot. Everything is there, but globally things are in turmoil. And fortunately, unfortunately, we have 20% of the market owned by global investors. So their behavior will have a huge impact, and local investors are on the boil. So my sense is that it will be acting just the opposite of each other. Global environment is looking challenging. Indian valuations are at premium to rest of the emerging markets. So they will be net seller kind of thing, or maybe not much buyer. But retail will be completely on rampage, and it's a perfect thing. This is a time to buy when everybody is uncertain. For long-term investors, uncertainty is the biggest friend. So this is a time things will look up and down types, but this is a time you build your portfolio.
So you are saying, and you have gone on record as well to say that if you get the opportunity at the right price to enter and great valuations, you will be a fearless investor.
Fearless, absolutely fearless. Because
so now that time you're saying.
This is the time. I'm like, as the market becomes worse, for a large people who are entering first time, this is the best thing to happen.
So then, if it's the best thing to happen, how are you? Where are you taking out your shopping bags and going shopping right now? Then?
So we are a regular shopper. In fact, we were there in the investment committee meeting, and there we were discussing which sector to. So I was vehemently, kind of.
I wish we were a fly in the wall on that investor meeting.
There's not much, but we have divided opinions. But I was pushing for don't be too much underweight on the Indian IT. Because see, there are two sectors which are very large in the total scheme of things. About 27, 28%, 30% is banking, and 24, 25% is Indian IT. So when one is going up, banking is clearly on the way up. So I mean, everybody must be telling you, and stock is performing. So that's one thing. But IT is under pressure. Okay, but that's a very large, high free cash flow, and the strength. I mean, there's a it is India's icon. India is known for that particular sector. And
but you're not worried about global recessionary fears for IT?
But it is, as much you are worried, I'm worried. The guy who is holding the stock, he also is worried. So it is there in the price. So if it is the recession, right now probably market has priced in mild recession. Okay. If by chance the recession turns out to be complete disaster, because global macro today, like what happens to Russia-Ukraine war? I mean, today first time they have talked about Third World War. If something like that happens, then all bets off. So we are in those kind of global, and unfortunately, Indian IT has 90-95% revenues coming from offshore. So that, in my calculation of things, is kind of a risk. If my 95% is domestic, my revenue is assured, and that's where the private sector banks are extremely well point. 99.9% revenue is from India. My domestic borrowers, savers, everything, my cost structure, my everything. Whereas here, my cost structure is sitting here, my revenue is there. For some reason, by chance revenue has challenge, then because my cost structure is all sitting in India. So the devaluation of rupee is going to give me a tailwind, but by chance if there is a deep recession for some reason, then I don't think it is priced in.
Okay, but so when it comes to IT, then given that that's your outlook, are you saying then just stick with the leaders, stick with the large caps?
No, just keep watching. See, the point is, now it is at average valuation. like TCS is a bellwether,
Yes.
TCS, Infosys. So if they are at 25, 26 P multiple, worst comes to worst, it will come to 20 P. Earnings are still growing. Nobody is saying earnings are going to be cut,
Yeah.
whether it goes at 10% or 15%. But if by chance the valuation comes to 12, 20, 21, 22, just buy. You can never get the bottom. It might go to 18, but
Yeah.
just buy. So my recommendation is just don't be too much underweight.
On the IT.
Say if the IT in the index is say 12, 13%, this is the time to start stepping in as
Okay.
it starts going down. But this is not the bottom. You can never catch the bottom. You are on the way to bottom, you are buying.
Okay.
And if by chance there's a capitulation for some reason,
Yes.
just all in.
Okay. Okay, great. So you've given me my first headline. Now, moving right on, you're talking about the macros being so
Yeah,
unpredictable.
yeah.
No one really knows where things are
Yeah,
headed, but
yeah.
inflation is a huge, huge concern. Correct?
Global inflation.
Global
not
inf-
India.
Exactly. So
Yeah.
we've managed to remain fairly decoupled. The India story is looking quite promising right now.
This decoupled world is very bad.
It's a very bad world.
This is interdependent world.
So there's no
So,
possibility of
no,
decoupling.
I mean this stiff relationship between say India and China or Russia and rest of the world but Russia cannot live without rest of the world and the world cannot live without Russia. You know, so
Okay.
that's the compulsion of the today's economy. I mean, it can bring a lot of pain. You see what is happening in Europe today.
Yeah, and speaking of pain, even with what's happening with the FIIs, right?
Yeah.
Liquidity being pulled out, which you spoke about.
Yeah.
How worrying is that factor right now, given that now we're seeing the gap between the DII buying and the FII selling intensifying lots more, no?
Yeah. So that's where the third factor comes. That's the corporate earnings.
Yes.
The real decider referee will be the corporate earnings. So if my corporate earnings are like growing at 15, 17%,
Yeah.
then I have no issue. Let the FI sell everything. I have
Earnings.
enough buyers on the sidelines from India side, domestic side. So, I mean, why I'm a little cautious in next 12 months is that because the corporate earnings are slowing down.
Okay.
This quarter earnings have been cut by 3 percentage points.
Yeah.
And I'm talking about the guys whose job is to only predict earnings. I can see only 10, 15, but they are saying 250 companies. And they are cutting. And I spoke to head of research. He's saying, sir, now we are cutting 850 now it has become 815, 820. And most likely this is going to come through. But the same guys in next quarter, they come and again say, sir, another 2% cut. So we are on the
That
cut
is-
cycle. This is the first cut cycle. And it doesn't stop with one. So I would remain cautious. So if by chance earnings say 23 because of the say commodities and all, we are kind of that base which had created, oil and gas, आपका steel, aluminium, वो सब निकल गया. Once that is done, I think actually we are on the solid phase.
Okay.
Because from there, maybe the commodities also can come back. And the growth which is there in say tech or say banking, insurance, because of COVID impacted base was there. Now, so one has to see how the corporate, if corporate earnings come at 15, 17, 20%, bet the house.
Okay, on that note then, my stomach is rumbling and I know in your Sky Lounge you've got some lovely lunch lined up for us. So shall we go
Yes,
towards
please.
the
Please
Sky
be my
Lounge?
guest. Yeah.
Thank you. All right, now that we're seated down to eat, I hope you'll give me some nice mithai and good Diwali sweets. But in the meantime, Mr. Agrawal, wanted to just understand your outlook on the next mega trend. Where is it that you see it emerging? You know, we're talking about these new emerging sectors, this manufacturing renaissance in India, playing the defense theme, the capex cycle. How are you looking to really leverage this theme?
I mean, most of the time we get to see the trend developing only after, you know, it is well into the, what do you call, happening. So generally, you know, at the bottom,
Yeah.
at least I have not been able to catch any of the trends, I would say. Even the first big trend I saw in my career was a Y2K trend
Yeah.
in 95 to 2000. So in 95, I didn't know the difference between software and hardware. Okay. In 97, and so I had some stocks in Satyam and Infosys. We sold it out.
Yeah.
And then in 97, by reading FT, I realized that it's a huge trend, mega
Yeah.
trend in 97. And then we allocated 5-6%, which became 80% of my portfolio. So that magic is there. But my sense is that globally, and these trends are super trends are typically global in character, starting from US. So they do say typically tech has been the 2000 and 2007 has been finance.
Okay.
Global financial crisis with the mortgages going overboard. Now 2020 is again tech. Slightly different avatar. This time it is digital companies and all.
Yeah.
But basically tech.
Yeah.
The power of internet, ye wo sab. That time it was .com, this time it is digital.
Yeah.
So my sense is the next global boom will be non-tech.
Will be non-tech. Okay.
But I have no clue whether it will be defense, whether it will be energy, whether it will be finances, whether it will be real estate. But these are the probable areas which could be, the market might tilt towards that.
Okay. And speaking of identifying opportunities, Hero Moto, something way back that you guys have invested in. And you know, the auto space, you said it, like it started off with two-wheelers, entering, you know, the low value model, and now of course the big EV play. Recently we've seen Hero Moto's underperformance, but you're saying that there could be an opportunity on the anvil?
There could be, but you know, the sector, one has to be very careful what you are buying, because there is a migration from, the world's biggest migration from IC to electric.
Yeah.
And electric is no profit zone, mind you. Typically when migration happens, the new one is always with a more margin. But here, unfortunately, IC is making a lot of money.
Yeah.
And EV is making no money. In fact, it is incurring losses. So you're going from highly profit-oriented share to no profit making. Now, whether it will in the years ahead, of course, it will make profit. But right now, 2-3 years is very challenging. So first thing is at what pace actually transition happens.
Yeah.
Because India cannot afford what the America or Europe can afford.
Yeah.
Our paying, we are at 2,500.
Yeah.
They are at $60,000-$70,000. So their affordability of very high cost EV is very different from India's this thing.
Yeah.
So relevant technology at an affordable price, and they are the
That's a
producer
big
to
challenge.
make money. So it is at least a decade away or maybe 70 years away. So the country is not going to wait. So my sense is, and in IC no competition is going to come. So all these guys like Hero or Eicher or Bajaj, Mahindras, I mean all of them, they are going to make tons of money. I don't think P multiples will get related big time, but earnings will be pretty good in the years ahead. And as far as Hero MotoCorp and all are you saying, they are all play on the rural economy.
Theme.
And rural theme, I think still somehow rural has not picked up as it was expected post-COVID. So maybe another year or so. I think this month was good.
Yeah.
This month was good. Let's see how the Diwali goes.
Yeah. Let's have some snacks, salad on that note. Mr. Agrawal, what would you like? Can I offer you something?
I'll just have salad.
Okay.
Please, you focus on...
I will.
You wanted some mithai, so you can have rasmalai.
I'm going to enjoy.
I think that's a Rajbhog. I think that looks wonderful.
Oh, yum. But you also have to have some. You're keeping it
I'm not
healthy.
allowed, yeah.
Okay, okay. So, cement is another very hot sector that everyone's talking about. Now with Adani's entry into the space, a lot more consolidation, how does that change the dynamics?
It changes the perception, not the business reality.
Okay.
Because demand cannot be changed by who's playing it. If the economy slows down, demand for cement will also slow down. But if economy grows at 7%, which is what is the desire of the government, that we should grow at 7% compounded, maybe some blip for global slowdown, but basically we want to engender 7% growth. If that were to come through, obviously cement demand will boom. But that's not the condition on the ground right now.
Yeah.
You know, so I think it will remain positive because of entry of Adani's and consolidation process and all. Some deals will happen.
Yeah.
You know, so that will definitely keep driving the valuation of the sector, and the interest by the fund managers will be there. But I don't think the earnings, which is where my focus is always, how the earnings are going to shape up.
Yeah.
So, I mean, that doesn't change the earnings profile.
Given these inflation concerns, what's happening with respect to the earnings as well?
Energy, as far as cement is concerned, it is a huge energy consuming sector on the input side as well as output side.
Right.
Input side through coal and all for making cement, and output side for transportation. So energy is extremely important component of cement, and the people's paying power is very limited.
Yeah.
So your margin gets crushed. So we are in that position right now.
Yeah.
Let's see, how the world transits and Indian economy transits.
You know, speaking of being careful, a lot of new investors also entering the Indian markets of late. We have seen the retail participation that has grown quite significantly. And you've spoken about a successful investment mantra being looking at margin of safety. What would be your advice for investors by and large approaching the markets for the first time?
See, one of the things is that now it has become really competitive. You have to be, even in my position, I used to be, say, devoting 30-40% for finding stocks. That's not sufficient, I can tell you this. You need more time. You need to be literally 24/7 to find good stocks because there is a massive competition.
ET now?
Pardon? Yeah, of course.
No.
That also you have to do. That also you have to do. Pick up all the interviews and everything.
Yeah.
But
so do your research well.
You have to do research a lot more.
Yeah.
First thing is you have to get your framework right. So fortunately, I have my framework. What works for me?
Okay.
I am very clear.
Yeah.
Now the issue is that QGLP, I know that as theory.
Yes.
But you have to get now companies to apply it there. Now finding those companies where you have a growth higher than PV. Basically, fundamentally, you have to buy mispriced growth.
Okay.
Once the quality is there.
Yeah.
Once you approve of the quality, okay. One thing is that if the quality is bad, it is no. They will go to the hell and we'll also go to the hell. So let's not go to the non-quality.
Yeah, that round.
Okay. So if the quality is good, then the issue is that where do I get the mispriced growth in the marketplace? So earlier, if you are going to 5 companies, we used to find at least 3 or 2 as a strike.
Yeah.
Today, when you go to 10 companies, even finding one company is tough.
Yeah.
And companies have really increased their ambition to increase the market cap, or they're ambitious about higher market cap. Somehow, it's a change of industrialist behavior today. I would say their communication is very aggressive, and a lot of private investors. They have a lot of money now.
Yeah.
1,000 crore plus family offices are plenty. You can't count. I'm telling you, itne ho gaye.
Yeah.
So and then mutual funds continuously is getting 15-20,000 crores every month. So there's a lot of competition for worthwhile stock.
So as a first-time investor, what would be some key investment mantras that you think people should adopt? The first one we heard from.
First thing is use your common sense. I'm telling you, the small city guys, they have a lot of advantages which big cities don't have.
Yeah.
Say if you are in a Nagpur, if you are in Raipur, if you are in Jabalpur, Indore, you can actually do survey of the companies on the ground. Aishar में आप जाके चाय पियो, आप एशियन पेंट वाले के पास ब्रेकफास्ट ले, आप MRF वाले के पास, you can actually talk to them and they'll help you because those guys know more than the company guys. They have the connect with the consumer directly, and they will not filter because they have no axe to grind. Whereas when you go to the company, they always give you a good picture. If a company's tire is of bad quality, the dealer will say this company is useless. But company itself will not say that my quality is bad. So कैसे करोगे आप?
So that's the advantage.
So that's the advantage, and then slowly you learn how to bet. In good companies in bad time.
That's the key.
So this is a time when post-COVID you are coming out. All the industries, all the companies are not recovered fully. You know, so wherever you see that recovery is delayed, but companies are excellent.
Are you seeing that anywhere right now?
Yeah, that is there.
Which sectors?
That's what I'm saying. I'm not getting enough time. I'm finding it is tough. But say like automotive, it's just about recovery. It is only 6 months that it is into recovery. Recovery is going to be much longer. Banking has just about started. Entire NBFC banking, they just about started. They're 3, 4, 5 year cycle before they start. They commit enough mistakes.
So let's talk about banking also because of the huge weightage that it has. You spoke about credit, the credit growth cycle is picking up. You're seeing asset quality as well that's being looked after. But then even then, some of these large cap banks, HDFC, Axis, ICICI, but the performance has been fairly tepid for the last 1 year. So you're saying that it's just getting started. What is the outlook?
Yeah, because your global investors, they are selling.
Yes.
And they are the largest owners of them. So
banks.
when they want to cut their position in India by a percentage or two, what do they sell? They sell
so they've borne the
banks
brunt
and
of it.
IT,
Exactly. So now what should investors who've been patient in these large cap
अच्छा है ना वो लोग बेच रहे हैं उसके उसी कारण से आपको 10 का चीज़ 7-8 रुपए में मिल रहा है अदरवाइज इट विल बी वेरी एक्सपेंसिव सी द डे ऑन विच retail investors are buying in a secular way.
Yeah.
Global investors, they are cyclical. They are opportunistic, rightly so, because they can buy something else, cement company, at half the price in China or some other place. But eventually they cannot, I mean, I'm 3.5% of the global market cap. I'm heading towards 5%. Allocation by global equity managers is a percentage or less than that. How long will you keep selling India? And when India does well, as a global recovery starts, at that time you want to come and buy in a hurry. You sold it unemotionally, you'll buy it unemotionally. But my retail is buying continuously. So when both of them they want to buy, you'll have a Diwali.
Dhamaka, yeah. Speaking of Dhamaka, even the digital space, of late we have seen a pickup in a lot of these companies, at least taking note of their profitability. You guys have bought into Zomato, as we all know, still holding? Still holding Zomato. And you've also said that within this space, it's easier compared to other sectors to identify your winner within the digital tech space, right?
Yeah, so just 1 year back, when digital madness was there, we also...
You jumped onto the bandwagon.
We also went into that and we bought into some of them, you know. So, yes, I mean, from those prices, we are down. But see, it is a short-term phenomenon. But is the long-term story impaired? I don't think so. If anything, they are learning.
Yeah. See,
they thought that they delivered what the market wanted. What market wanted? Top line growth, GMV growth, and don't bother about the bottom line. In 1 year henceforth, they're saying, first, get me profit. And then growth.
Yeah.
Any growth without profit is of value. That's what market is saying today. But 12 months back, the mandate was different. So they are changing their act. They are saying that, okay, we'll grow, of course, but we'll go with less loss right now. At some point of time, in next 1 year, they'll say, we'll grow only with the profit. Because it is magical. Digital is magical.
Chalo, now you're not eating any of the lovely Diwali
That's
sweets.
all for you.
We're right here with this lovely bowl. It's Diwali time, festive season. Before I let you go, what is going to be the next area, the Diwali recommendation that you have? Maybe not a stock, but a sector that you have to give one.
I would recommend, I would recommend one. That please build your equity portfolio.
No, that's advice.
Don't stay on the, people are staying on the fence. People are going in cash.
Build your
so I would advise that yes, you buy very cautiously what you buy, but start entering the market.
So what is Raamdeo Agrawal buying?
I'm 100% allocated. I'm talking about allocation. And since I don't buy direct stocks in my name, we do all in the funds. I own all the funds actually. 5%, 10%, 25, 30%. So I own my funds only. So my whole effort is to pick stocks for my funds. You know, and then we have private equity. There we buy into unlisted company. Very exciting, private equity possibilities are there. So there we spend time. So my time goes in buying private equity and public equity for the funds, and I invest through them. So that's why direct stocks where I sit is conflicted. To some extent. Yeah.
Okay. All right, Chalo, we didn't get any Diwali ideas, but let's get a Diwali wish from you for our viewers. What would you like to wish them? A prosperous new year?
A prosperous, wonderful, healthy, wealthy year. And I mean, you should have some sense that let God give you courage that if market declines, see in good time, everybody has patience. Let God give you unlimited patience for a downturn in the market.
Don't be sad when there's a downturn.
No,
you said.
yeah, you must celebrate your Holi and whatever Pongal and everything. Even if market remains in corrective phase for 10-15%, it's only a temporary phenomena. The downs are temporary, ups are permanent.
Downs are temporary, ups are permanent. Mr. Agrawal, on that positive note, I'll end this interview. Thank you so much for taking time out and wishing you and your team a very happy and prosperous Diwali.
Thanks for coming and sharing some lunch here.
Thank you for this lovely meal as well.
Thank you.
Thank you.
Thank you.